What is going on, everybody, and welcome to another technical analysis video where I dive into the stocks that I'm looking at for the week for potential swing trades, intraday plays, and I also provide a weekly analysis where I'll go over upcoming earnings, upcoming events, and also you can check me out on X at Hemi137 as I give a daily pulse of the market on current events that could potentially influence what may occur in the coming days. So, with that being said, let's go ahead and get started with smashing the like button and let's get this kicked off. Now, as you can see, I've been talking about this ascending wedge and it is quite manipulated heavily. Obviously, this is the monthly, but it's been heavily manipulated. We're getting to that point to where this thing is about ready to snap, which would in tune align with the current event that is the election. Once the election is over, I believe this will have a pretty decent correction. How much, we don't know. It's been heavily manipulated over the past year and a half, considering it's a very critical election and in a lot of senses. I believe that once the election has been completed, a lot of the massive spending that's been going on over the past 2 years is going to slow way down. And at that point, you could potentially see a massive correction, something that has been much needed for about 2.5 years. Now, like I stated, on average, you have about a 42% correction in the market. So you're kind of looking at this. This is why I have this marked at the 73 mark. It's about 72%. That's a give or take. So I think we can at least potentially see a correction down to the 46. So about 75% of this move, I think, could potentially happen. But just depending on what does happen, it could go a lot. It could get a lot worse than that. Again, pandemic being way down here at the 22 mark. Don't want to fearmonger. That's the last thing I want to do, especially when you're getting into this potentially big position in which we can make a lot of money going forward. So you have to have a list. I've been going over a lot of different stocks that I really like and I really think could do a shine. That's why I repeat a lot of the same stuff that I do. I do bring in new stocks occasionally, just depending on what it is. But at this point, I think it's important to go with stocks that are well known for the most part, or have really great potential to potentially do well, especially in an AI environment, as I do believe AI infrastructure will do very well in the next coming years. And then looking at humanoids on the back end of that. So, with that being said, SPX, like I said, I think, again, I don't like the position it's looking at on the monthly. We can drive down to the daily here. So what we typically look at, obviously it looks like it's out of whack here, but on the monthly, it looks like it's aligning perfectly. Again, it's been very choppy. Again, playing between this range of the 58.64 and the 5800 mark. It could potentially see a drop down to the 57.59. Now we have a very big week on deck. We have a lot of information, a lot of data coming out. We have a new unemployment, or we have a new non-farms coming out on Friday. We have a lot of the heavy hitter companies reporting earnings this week. There's a lot priced in, so you're not going to be able to get much out of options unless you're essentially doing some kind of alternate play in which that industry may have a big, essentially AI industry. So anything that's not directly reporting this week, you could potentially a sympathy play off of that would probably be your best when it comes to options. Now, equities is a different sense. If they do well, I think it's probably better to play equities. Or if you are going to play options, you're going to have to spend a lot in the money and hope that it goes in your direction, or else you're going to burn a lot of cash. So with that being said, we will see here, because right now, again, you have some pretty good support here at the 57.54 mark. You got the 20 and the 50 that are getting very close to majorly supporting this. If it does break below that, again, you could be in a free fall for quite a bit. You could see some of this massive selling. Again, these gap down here was obviously a major event when you had the yen carry trade. So this just shows you how quick this thing could start selling off, because it's been slowly grinding up as we get closer to the election. Something I talk about all the time. This is why I use events, because events kind of help guide you on where this could potentially break out. Now, once it gets closer here, down here to the 57.65, if the election happens and a certain somebody gets in there and the market doesn't like it, this thing could turn over very quickly, start selling off. So just keep that in mind. Again, the massive $1 trillion being spent every 90 days isn't sustainable at all. It's actually bankrupt. Pretty much bankrupt the Fed. So at this point, you're dealing with fire. You're going to have to really rein in a lot of things for things to be corrected. So we'll see what happens here in the coming days. But as of right now, that's kind of range I am looking at for here. But again, taking it back to the monthly, you're going to correct at some point, and I think it would be rightfully so to aim for that 49.85. I think would be justified. 800 point correction, roughly 900 point, potentially even 1,000. It could potentially even come down back down to here. I would expect at least something like that to occur after the election without all the spending. Again, it could go even more. Things are reflecting. This is why I do have the analysis, the weekly analysis, because I go over kind of and explain why it's worse than what's being reported, despite this golden era that we keep talking about. That isn't actually true, in my opinion. But we'll continue to watch and see what happens there. Now let's take a look at Bitcoin. Now, Bitcoin has a big news on Friday, as essentially what's going on is Tether is essentially, there's been a lot of questions about Tether for a very long time, and now it started being investigated, and it had some sell-off on Friday. I don't think this is actually reflecting the true numbers as of right now, but as of right now, I said it needed to break above this. It was important, and now it's selling back off to 62. Again, it breaks that, it's going to come back down to the 51, start looking at that 50 mark. If it breaks that, again, you have some support here, 45, 35. I think this thing will get lower, provide some liquidity. Like I said, I think Bitcoin is going to continue to follow the market. You have to understand that once things correct, things are going to Bitcoin's going to do the same exact thing. So we need to keep that in mind when moving forward. Bitcoin isn't special, isn't going to be the next reserve currency, in my opinion. I think there will be a lot of use for it. And now you're talking about global currency. I mean, there's a debate there that could potentially happen. We'll see what happens. Again, whether we use XRP for just changes internationally and then use our own currency, could be potential. We don't know. We don't know what's going to exactly happen. There's a lot of there's a lot of potential there, but again, we don't know for sure. So, and you're not going to get answers right away. So this is why a lot of people have been out of crypto, because they want it to be more regulated and more safe for the average person to come into crypto. So again, we'll see, but expecting a liquidity spike down when we do price in a recession, and then expect it to recover, make new all-time highs. It's funny how when you get close to the all-time highs, specific news drops like the Tether news, and then these things will start selling off. So continue to watch that closely moving forward. Now let's look at bonds right now. Like I've talked about, it's starting to correct quite significantly. Bonds has been a tricky thing, because we haven't gotten pure panic mode yet. We've essentially floating around 25, 50 points on the next monetary policy, which I believe is next week. That will be important. That will be after the election. I think at this point they have to continue to start laying off heavy, because unemployment numbers aren't what's being repeated out there. We've seen the revisions of, I believe it's 818,000 jobs that don't exist, that have been reported. I think it's way over that. There's speculation that it is well over 1 million, even despite this revision up in this money that we don't have. So again, I think the bonds, you're looking at a potentially pullback to the 88. It could happen. I think once this thing really starts ripping, if we look anything like we did in 2007, 2008, when they had a great financial crisis, expecting January for things to start accelerating and them to start really cutting rates rapidly at that point because of what's going on. But the problem is, again, you're always concerned about inflation. We haven't really corrected inflation. We just revised reports to make it look like it's been corrected, but ultimately, we've been kind of slowly crashing up for quite a few decades at this point. So, again, we'll watch and see here, but looking for that strong support there. Looks like we broke and we retested the 92, and we're breaking out of the wedge, which is a bad thing. But it could be one last liquidity spike before we makes a massive run up. So again, you have to wait and see with this, and see if they do, because back in early 2008 they started doing emergency rate cuts. That's kind of really what you're looking for to happen, and when things start getting in bad shape, to where I've always talked about how this utopic perspective, once that gets tainted, that draws fear. And that's kind of what we're looking for, and what I've been talking about for a while, is that that's the one event we're waiting to occur for the bonds to really start ripping back up. And they have to do some massive cutting, because again, official reports, we got a lot of stuff that's supposed to take place in the new year once we have a president locked in. So we'll have to wait and see when that does occur, but it could get really nasty very quickly, and want to be able to position and plan early enough to be able to position for that. So Tesla, again, had some really, really positive news for earnings. So right now, what we're really watching is for it to hold the 260 here. If it does, I think we got essentially a straight shot up to the 320. So this week's going to be important to see where we open up. If we gap up again, which is a strong possibility. Normally, when you get these run-ups, it's going to be you're going to essentially get a couple days where it's going to run up, and then it will correct at that point, potentially making a new higher low here. Again, we'll have to see how this reacts once the market starts correcting again. But this may have been the last dip right here in the 200s before this thing stops doing that. Even when we do get a correction in general, again, a lot of the meat of the bone is going to be on Mag 7 if the market starts pricing in a recession. So it'll be interesting to watch how this reacts. But as of right now, what we're looking at this week needs to hold the 260 mark. If not, if it gets pulled back in here, expecting a lot more chop, potentially trying to reach back down to that 220 level, and then we'll go from there. But as of right now, it's looking positive. If it can stay above that, I think it's easily going to 300 this week. But we'll continue to watch that. Palantir, again, still in price discovery mode. This thing's gone absolutely parabolic. Again, we'll have to see how it reacts once we price in a recession. But again, very positive sentiment. Now Wall Street is kind of understanding what Palantir does. This thing could start massively pushing up from this point. So definitely a must watch moving forward. A lot of these are very overextended, so I don't want to bring them up. PayPal, I've talked about PayPal for such a long time when it was consolidating around this time. We're now at 82. I think this thing will correct to some extent, maybe down to 65. Really just depends. Like I said, when we price in a recession, a lot of these are kind of giving a little bit of room to breathe before it corrects. But you have to understand, I think if we do correct, it's not going to be for very long. I do believe we'll start printing money again at some point, heavily supporting the consumer, because we're going to get into that same phase like China, where we're going to go into a free fall, and they're going to have to do something. And the only thing they can do is really start cutting rates rapidly and printing money to get this thing start churning around. But it's not going to stop the free fall automatically. It's going to take some time. May get a short little pump back up, but then continue to start selling off. So that's kind of what we're watching there. It's kind of looking for a pullback here, but again, very strong. So if you've already got positions around here, when I've been talking about this 58 level, you're doing quite well right now. Just expect a slight pullback, potentially one last one before a bigger rally, I think, once we start getting this thing turned around. But we do have to price in a recession. SoFi, I've talked about this again around this same level when it was floating around here between that $7 mark. bouncing around, and now it's doing very well. We'll see about SoFi. SoFi is a fantastic company, but it makes all these massive run-ups and then it sells off heavily. So we'll have to see again if that's the case moving forward. But I still want to keep this one on the map because I do believe it can can have a nice run up here itself. Celsius, again, a very good company in my opinion. Just come to find out, a lot more people, a lot of the younger generations prefer to drink energy drinks as opposed to coffee. So being said, I think this is a great one for the future. Slowly adding to this position, we're starting to see the consolidation like I just went over with SoFi and PayPal. You're starting to get a lot of consolidation around here. Going to be adding a lot of shares around this point for potential future swing. It'd be a couple months for this one, potentially even a couple years, so a longer swing potentially in this one. But I do like Celsius moving forward. And like I said, it can potentially drop down to 16. You have to be aware of that. And I talk about the liquidity spike all the time. I wouldn't be surprised if it does break this, make a brief touchback to that $20 mark, and then start rising from that point. So just be prepared. If you're buying around this consolidation, look for a liquidity spike and then potentially jump back up. So that's what I'm watching for Celsius. I still really like Celsius, and ELF is the same exact way. I really like ELF. Their year-over-year growth is ridiculous. A lot of consolidation here, buying up as much as I can here, potentially spike down to the 89, buy more here, and then ready for that run back up to the 220 is really what I'm looking there. But beyond that, I think it can do well over that moving forward. But you have a lot of things that are going on, like tech is hurting right now. Obviously, this is a cosmetics company, but tech is hurting right now so bad that Apple just kind of just stopped doing anything else other than just selling the phone. They don't have any future development. They're waiting for things to kind of cool down. They'd be doing historical buybacks just to keep the stock up to where it is right now. Again, survival mode for Apple, but I think ELF is still doing very well, and they're trying to expand and do other things. So looking for it to continue to consolidate to the 116 and the 91 mark. So we'll be buying more around here as this thing is preparing to move up. And then Portillo's, I really like this one. It's been consolidating nicely here, slowly adding some shares here, but I really want this thing to dip down to this 1088 mark, potentially even below 10. I think we can go below 10 briefly. Like I've stated, if we start pricing in a recession, I think it can briefly hit this mark to add. But this is, again, another long-term swing. These three are, I think, are great buys right now. In a couple of months, I think things will flip on these, and then these will start really starting to push up. But as of right now, I do really like that as well. Planet 13, slowly been adding this one. It's been a lot of consolidation between this 55-cent mark and the 49-cent mark. I don't really like bringing this one up a lot because of the fact that there's still a lot of risk in this, and it's going to take. This is more of a investment than a short-term play, because I think it's going to take years for this to really do anything. But if you're in that MJ space, I think this would be a great one to buy. I think it's got great opportunity in general, but ultimately, as of right now, this thing is like a double zone right here. This is why this looks like it's stacked on top of each other, which can occur sometimes. But this is a great buy zone right here. And I think once everything starts to turn around, I think this will as well. And I think a lot of these, like your ELF, your Celsius, and all those will do very well in the future. Once things start to churn, and I think in the next couple months you have that consolidation, buying shares at that point, and then I think you have a massive run up to the upside moving forward. Again, the Mag 7, I don't really want to go over those because of the fact that again, they are very overextended, and I think when the market does correct, those are going to take some heavy hits, much like we saw in 2022. So waiting for those to really correct and then kind of move from there. Take a look at BA as always. Again, I don't know how it's $155. I'm actually expecting this thing to go back down to 100. But right now, it's essentially playing between the 166 and the 148 mark. Looking forward to at least go to 120, but I think eventually it will get down to 100. Not saying it will, but my confidence levels is going to go to at least the 126, and then the probability of it going to 100 is probably be a little bit less than that. But I think we could potentially reach there just because it got consistently bad news. And over the past week, they lost. They're essentially giving up on the space exploration as well, I believe, because of the catastrophe that they had with a space station just not that long ago. So then you got JP Morgan flirting with all-time highs. It's having trouble in this price discovery mode. So we'll see what happens here. But this is roughly around this 225 is just floating around here. Expecting this thing to pull back to the 215 mark here, potentially this week. Again, we have a lot of potential news. We got banks that are still suffering. If we get bank runs and stuff like that, this is going to absolutely gap down these banks. It doesn't matter how good you are, or being the number one bank by far. I think all these will still correct either way. So financials is something you need to keep a close eye on because of that. So. And then a lot of these, it looks like value is starting to correct on some of these. I'm not bringing up any of these just now because I want them to correct a little bit more. But it is something to definitely be paying attention to moving forward. And I'll bring those up when when I like the price point. I don't want to bring up stocks that I don't like the current price point. Tesla has been kind of sideways for the past couple of years, and I think it's a fantastic investment moving forward. And I've been mentioning that since the 175 mark when we've corrected in the 200 mark. So a couple buy dips. But aside from that, right now, things are pretty overextended. So just waiting for a massive correction on some of these other things before I really start mentioning them. So if you've made it this far, go ahead and drop a like. And until next time, I'll see you guys later.